So based on what you said that you don't have that many issues with managing an active position, but it looks like the issues are something to do with hesitating in your trades. So you see a setup, it looks decent, but you're not exactly sure if you should pull the trigger or not, or where or from which level you can get away with pulling the trigger, right? Okay, so I'm going to address this specific problem in this video. So what I have here is the threshold of the quality of the trade, right? So, and just for example's sake, to make things easy, I'm only going to be talking about the momentum. So on one extreme, we have the F. This is like the worst type of trade. And then on the other extreme, we have the A+, the best type of trade. Simple and straightforward. Now in the middle, we have the Cs. Now the C grade setup is the one where it's not EV negative, but it's not EV positive either. If you were to take 1,000 C trades, you would probably be burning money to fees because you'd just be stuck at break even, right? So the further away that the price action is away from this C, the easier it will be to define. Example, with the Fs, if you have a super duper duper choppy range for like 70 hours straight, it's fairly simple and straightforward to look at that and be like, yeah, I don't want to trade momentum in this range, for sure. And the same with the A+. Like on the absolute extreme, if you have a 72-hour long staircase and it's already broken all-time high and it's still going and the volume is going ballistic and it's up like 100% in the last 24 hours or something like that, something silly, you can look at that and without even thinking too much, it's fairly straightforward that, okay, yeah, this is an A+ setup and there really isn't that much room for the hesitation. Now, where the hesitation comes about is not at these extreme points. I found that in my own trades and also in the trades of others that the hesitation starts to kind of creep in somewhere closer to the middle, right? Because the extremes are really easy to define, but in the middle, that's where it gets really messy. That's where it gets really messy, especially between this specific gap with the C's and the B's. So the C trade is the one where it looks kind of okay, but you say, you know what, this still isn't good enough. I don't want to take this trade. And then the B is where it looks okay, but not really that good, but it just barely crosses the line. And and you say, you know what, fine, I'll take this trade because I have conviction that if I was to repeat this action 1,000 times, there's a high likelihood that it would still be EV positive, right? So the gap between the C's and the B's, this is where I found this in my own trades. This is where the hesitation comes about, right? Because if you misdefine something as a B, you could be wrong and you could be taking an EV negative trade, right? But if you misdefine something that is like an A++, if you misdefine it, right? Because imagine that your margin of error is like 1 unit to the left and 1 unit to the right, right? So if you misdefine your A+ setup, it could actually be a lot better than you think and awesome. But if you were wrong and it's actually a little bit worse than you think, it's not a big deal because it's still an A, right? So there's still a whole bunch of EV there for you to grab. But the thing is with these Bs, if you misdefine it, you're actually starting to creep into the EV negative territory. So these ones are the ones that we have to be a lot more careful to trade. And these are the ones where all the hesitation starts to come about, right? It's in these ones. So how do we solve for this? So the first thing that I would really recommend is to do your very best to get a definition for what is a B setup. And this is how I would do it. So what is for a momentum trade, specifically for the staircase, because I know that I need a staircase before I am even going to consider jumping into a momentum trade. How big of a staircase are we talking? If I had 30 minutes of staircase, would I jump into the trade? No. Like, I don't care what's going on. If there's only 30 minutes of staircase, I'm not doing it. So what's the bare minimum of the duration of regime? Well, I'm going to need at least 2 hours of a staircase. I will not tolerate anything under that. Only in absolute extreme circumstances where there has been like huge negative news and I'm not only riding the staircase, but I also have news behind my back, then maybe I would tolerate something slightly under this, right? But like, let's ignore the nuance for a second. Let's just talk in normal cases, right? What is the staircase that I'm willing to tolerate? 2 hours. Okay. What about the volume? If I'm working with a 2 hour long staircase, the volume must be increasing. It must be. I will not tolerate it. If the volume is not increasing for a 2 hour staircase, this is the bare minimum, by the way. If the volume is not increasing for a 2 hour long staircase, I am not taking the trade. I don't care how clean the price action looks like. If the volume is not increasing, I probably will not take the trade. And then finally, with the price action, it cannot have anything which looks steep or spiky, right? So none of these and none of the low quality types of spikes either. None of them, right? So there cannot be the absence. What I'm looking for is the absence of a steep move / a spike, right? So now that I've got the clear definition of what I want to take for my B+ setup, in all trades where I'm only working with a 2 hour regime, then I can just clearly just run the price action through this filter. Is there any steep price action coming into the level? No. How long is the staircase? 2 hours, 13 minutes. Okay, cool. And the volume, is it increasing? Yes. If all three are true, then I'm allowed to take the trade. Cool. Done. Now, the last filter is from what levels am I willing to take this specific trade from? For a trade where I'm only working with a 2-hour staircase and the volume is increasing and the approach into the level is not a steep move or not a spike, I probably won't take this trade from like a local 1-hour high. I'm probably going to go for a 4-hour high or above, right? And that's it, right? That's it. Now that I've got these clear definitions in, this is what it's going to get. Like if you want to get really systematized with this, you can't, like, I would start with this, right? I would begin with this, but the next step from this, if you want to go deeper down the rabbit hole, is, okay, what if I have a 4-hour staircase? What if I have a 10-hour staircase? Then what? What if I have like a really clean, because I say this because if I have like a 6-hour staircase, I'm actually happy to get away with flat volume. As long as the approach into the level was clean, and I have 6 hours of staircase, then if the volume is flat, I'm actually okay with it. It's not that big of a deal. So I would like isolate the duration of the regime, or like keep these two isolated, and then say, okay, well, what is the absolute minimum that I would be willing to tolerate, right? And get really, really, really clear definitions on everything. But I would just start, like, this is what I would start with. It can't be steep into the level. Minimum duration is 2 hours. The volume must be increasing, and I'll be jumping into a level which is like a 4-hour high or low, or beyond that, right? So the minimum time spent away from the level is it must be a major level, so a 4-hour high low. Done. Awesome. Then after you have these clear definitions in place, the next step is to understand how often are you actually wrongfully hesitating? Because some of the times when you hesitate, you do it rightfully so. And other times when you hesitate, you just passed on something that is an EV positive opportunity. So this is how we're going to go about it. Every time you hesitate, or every single time that you're not sure whether the trade meets your criteria or not, or if it does meet your minimum criteria, but there is just still something on the chart, or there's still some external condition which is causing you to hesitate, and you're really like feeling antsy to pull the trigger on the trade, by default, just take it as a dummy trade. By default, take it as a dummy trade. Then at the end of the month, it's going to be time to review all the trades that you've taken. Now, the first thing that I would do is to look at how many trades did you actually take as normal trades, and how many trades did you take as dummy trades, right? Because then you could look at the distribution between how many times are you hesitating or not sure, or just like messing around, versus how many times are you serious, right? If there is a huge distribution, something like this is probably a sign that, okay, there's a lot of hesitation. There might be a lot of hesitation going on, or maybe the conditions were just really hard to take, and fair enough. But okay. Let's get into the reviewing the dummy trades part. So when you take your dummy trades, I would split them into 2 different categories, and you can do this in a spreadsheet. You can call the first column right, and you can call the second column wrong. Okay, so dummy trades that you took as dummy trades that did not meet your minimum tradable criteria, you would put all the screenshots in here. These are dummy trades where you took the dummy trade, and rightfully so. Like you should not have risked any money on that trade because it did not meet your criteria, and you're just grabbing the screenshot for the sake of grabbing the screenshot, right? You're just doing some basic data collection. Now, the second category is wrong. These are the dummy trades which did meet your tradable criteria. They did meet it, right? Like whatever you wrote down as your minimum tradable criteria, it met that criteria, but you still took it as a dummy trade. You want to put the trades in here. All of the ones that you hesitated on, but it still met your criteria. Now, the next thing is, for every single time that you hesitate, you want to write the reason why you did not take it as a real trade. So not only have you have the screenshot, but you also have your notes or your explanation or your reasoning as to why you hesitated on that trade. Now, you might find something like this. Okay, example. The distribution on the Velo return buckets was really skewed in the opposite direction. Like everything was red on the day, and this coin met the criteria to be traded for a long, right? So everything is down on the day, and this is giving me a long signal. So it was something in Velo was throwing me off. Another thing, something in Orion was throwing me off. I got the minimum criteria for my B setup for a momentum trade, but it felt like the tick count of my coin was low, and it felt like the tick count of pretty much everything else was kind of low. So I wasn't really sure, like, does that like negate my trade? Does that push, is the tick count enough to push it into a C? Like, what's like, I'm not sure. So therefore, screw it. I don't know. I'm just going to take the dummy trade. Another thing was, okay, sure, it met the criteria, but I wasn't really sure with the approach into the level. It looked kind of like that, and I don't know if this is steep enough. Like, is this a low quality spike? Or like, does that not count because it kind of went like a little bit exponential? I'm not sure. The point is that you want to have the reason for what actually caused you to hesitate on that trade, despite it meeting your minimum tradable criteria. Now, the next step from there, I might need to pull down a little bit so I can have a little bit more space to work with. Give me a second. Okay, the next step is to look at what are the recurring themes in these notes. What is the number one reason that is actually causing you to not pull the trigger? What is the cause of this hesitation? Is it the level selection? Like, yeah, it means like the price action looks good, everything looks good, but I'm not sure if I should take the trade because this is a really, really recent level. So I'm not really too sure about the level selection. Is it a problem in the volume? Like, oh, this, like, the setup looked great, the price action looked good, but the volume like was flattening out before the entry and it started decreasing shortly before the entry, and like, I'm not sure, right? Is it something in Velo? Is it something in Orion, right? Whatever it is, you want to know or find out what is actually the thing that is causing you to hesitate. Is it, I don't know which level to pick to enter the trade? Is it something in the volume that's throwing you off? Is it Velo? Like, what is the thing that is actually causing you to hesitate, right? Now, the next step after you've figured it out is to go and see how valid that claim is. Example, let's say it is the level selection, right? It's the level selection that's really throwing you off. Now, this is where it's going to get tricky because you're really going to have to go deep, like digging deep into your journal, not just into the trades that you've taken, but also in trades that you haven't taken. So this means like looking at historical data, maybe reaching out with other people, reaching out to other people, looking at other people's trades, things of that nature. But if the level is the thing that is throwing you off, you're going to have to isolate the trades in here which you dummy traded despite it meeting your minimum tradable criteria. So you've isolated those trades, and then go into your actual trading journal and isolate the ones where the level selection looks like you still took the trade despite it having that same the same type of level selection as in these ones, right? You're isolating all those trades. And then you put them into a new doc, and then you go and do your review on that. And then you can, then you're basically looking at the frequency, the wins, the losses, and the total profit of all of those trades, which had that very specific level selection and this very specific criteria for that. Like, it kind of looks like a B plus trade or a B grade trade. Then you run your analytics on that, and you'll be able to see how effective are trades which meet this very specific criteria. Now, if it turns out that it's actually EV negative, guess what? Awesome. Because if it turns out that it's actually EV negative, that means you can update your definition on these B grade trades. Because if this is EV negative, that means it turns out that these trades that you hesitated on, you actually hesitated on them rightfully so. Like, it actually saved you money. So good job. Like, even though you technically broke your rules by hesitating on them, at least you now know that it actually, like, you breaking your rules and not taking the trade when you were supposed to actually saves you money. Cool. Now you update the definition and you go on with your day. That's like one outcome. The other outcome is, well, it turns out that this is actually EV positive. Now, if it's EV positive, then you have to find out, how can I reduce the likelihood that I hesitate when this exact situation happens again. Now, the solution to that is, one, you're going to have to get, I hate that that everything kind of circles back to this exact same topic, but you're going to have to get clearer and clearer definitions with what is it that you actually want to see on the chart. So one, get really clear definitions. And then two, if possible, because I might zoom or create a little bit more space. So we've got the cue, we've got the action, and then we've got the reward. So this is just for behavior change, right? This is just the function for, or the process for how a behavior occurs. So if we want to increase the likelihood that we do not hesitate on a trade when it meets our minimum criteria, we want something to appear on the chart which notifies us that this trade does in fact meet the minimum criteria. At the lowest level, this is just you putting in text saying, if this if 1, 2, and 3 are true, I must take the trade. And you just have that as a text box on the chart. Like let's say this is your chart. This is the level that you want to trade at. It's like approaching the level, and you just put in text like everything looks good as long as price doesn't spike the level. Take the trade. That means that if price spikes the level, you don't take the trade. If price does literally anything else, then you must take the trade, right? So at the lowest level, you would go and put a text box on like near where you would be entering the trade. At a much higher level, you would have an indicator which would flag for you what is the duration of regime, or an indicator that flags for you that the volume is in fact increasing, or an indicator that flags for you what is the approach into the level, right? So if you have an indicator which like in a binary type fashion, like yes or no, like yes it's increasing by a certain amount. Yes, you have a duration of regime that is at least n units of time long, so at least a 2-hour staircase. And you have an indicator which shows that no, you did not get a fast spike into the level. Therefore, cool, you're ready to go. So that's like one thing that you could do. Alternatively, you could jack up the reward. Now, this is like this is where it's getting into the woo-woo territory. You can say something like, okay, if I take 5 or 10 trades for which meet this specific criteria, and I don't hesitate, and I actually pull the trigger on it. If I take 10 consecutive trades like that, and if I don't hesitate 10 times in a row, whenever a chart meets this criteria, then I'll go and treat myself to a restaurant or like whatever you would classify as rewarding yourself for doing the correct behavior, right? So either like you get really, really clear definitions of what is the minimum tradable criteria, and then you make it easier to see that on your chart somehow in the form of a text box, or getting better indicators, like better custom-made indicators specifically for you, like your specific problem, right? Or you just jack up the reward, your own reward for doing the right thing. But yeah, I think I covered that, because yeah, if you like, ultimately, I need clarity at execution. I would say that we all do. We all need more clarity at execution. This is like a never-ending, this is never-ending, right? This is a never-ending loop. As in, like, no matter how good you get at trading, there'll always be some setups where you just want, like, that we just have more clarity. Like, getting clearer definitions on what is not EV positive and what is, like, that is what trading is all about. That is a never-ending journey. But yeah, I would to really wrap up this video. Let me, because I just want to give like a mini summary, or just some action steps. So, step 1, get a clear definition of your minimum quality B grade setup. Right. So this is step 1. We need to start with this. Step 2 would be dummy trade every time you hesitate, despite the minimum quality being met. Step 3 is review all dummy trades taken at end of month, put them into 2 categories, wrong / right. Actually, I don't even think the 2 categories is even necessary. Like, really, you just need to put the dummy trades where you took it as a dummy trade despite it meeting your minimum quality. So review all the dummy trades at the end of the month, put all the ones which met the minimum quality. Review all the ones which met the minimum quality, but you still took it as a dummy trade. Include the screenshot, include the reason for hesitating. And I would say this is like this one's like a big deal. So yeah, I'll make it bold. There we go. Then step 4, validate. So identify the main recurring reason, which is popping up for your hesitation, right? So is it velo? Is it the level selection? Is it the volume? Whatever that thing is, this is the thing that you need to clearly define, right? Because when we say, oh, I need more clarity, right? This is a very open-ended statement. But if we say, I need more clarity on volume, or I need more clarity on when I'm allowed to get away with trading on very recent levels, when there is a nice-looking regime, right? So get really specific, get like super duper specific. What is the actual thing that is causing you to hesitate? And then go review the stats on all the different, or you could say on, actually, you know what? Validate, what is the thing that's causing the hesitation? Yep. Identify the thing that is the main reason. Go review the stats on the thing that is the main cause for your hesitation. So if it's level selection, you want to run a whole bunch of tests on level selection. If you used really recent levels on all of your trade screenshots instead of like the major levels, how would the performance look like? If you use very recent levels on all of your A+ setups instead of the major levels, how would your performance look like, right? So we want to like run a whole bunch of tests get a whole bunch of data, review that data, and see like how valid. So what we're testing is how valid is my reason for hesitating on those trades. So it's either going to be very valid or very invalid. So what I mean is you take you identify the reason, what is causing you to hesitate, right? So you you look through all of your dummy trades. What is the goal? What is the actual reason that is causing me to hesitate? Then the next thing is define the thing. Yeah, I'll probably take this step by step. Define or get clearer definitions on the thing on whatever the main reason for hesitation is. So, e.g., level selection, something in velo, etc. Okay, then go review the stats on the thing that is the main cause, and then the question that we're trying to solve here is how valid is whatever my concern is actually. Is it like super? Is this thing actually super EV positive, and I've just missed out? Like I'm missing out on a whole bunch of gains from allowing this thing to cause me to hesitate, or the thing is actually very invalid, and this thing that is causing me to hesitate is actually it would actually lose me money, which means that it turns out that I am making the right call to hesitate because of insert reason here. Okay, I think I covered everything. Let me just double check. Let me just quickly run through this just one last time to make sure that I didn't miss anything. Psychological barriers. Yeah, you can this can be. You can override this just by doing all this. Okay, yeah. In that case, I'm pretty sure I covered everything there. Yeah, sweet. Let me know if this helps.